wrong chart. As we went higher, look at all these blocks that kick off. Is that what the hell do you think that is, guys? Do you think that's buyers at higher prices? Of course it isn't. So when we see all these buyers at higher prices coming into this, you must say, well, what are these guys? What the hell is going on here? Bearing in mind we've just cleared the 72.50 level. If we're just cleared the 72.50 level, what is that? That must be delta hedgers, right? Or sorry, not delta hedgers, but that must be option hedgers. So if the option hedgers are coming into that play, that's a lot of buying pressure, which is obviously being absorbed by who? The dealers, the commercials, yeah? So when you see that amount of buying pressure, take a look at the deltas. Is that not an incredibly large delta right there? Is that not something that you look at and go, wow, that is incredible. The amount of deltas that's pouring into the trade at that stage. You see it? So with that number of deltas coming in, you know that's a massive buy pressure for whatever reason at that ridiculously high price. So what is that enormous buy pressure that's coming in, guys? What is that enormous buy pressure? Hedgers. It's hedgers coming in off the 72.50 break here, isn't it? So the hedgers are coming in off that 72.50 break and they're starting to buy above it. They're hedging out their exposures above 72.50s. So if I know that that's hedgers, there's nobody stupid enough to buy at 72.50, right? Well, these guys aren't stupid. They're not buying at 72.50 because they're bullish. They're buying at 72.50 because it hedges their exposures above 72.50. Now, the big challenge is to get a price back below 72.50 so that they unwind those hedges there. So if I can sell into the higher prices, which we eventually got a lean against this block at the top line here, so I started to sell against that lean. If I can get a lean against that block and then we can get enough sell pressure coming in, it might open the door to this price then dropping off 72.50s back down to 71.50s, 71 evens, 70 evens, and so on and so on. So this is what we start looking for. This is what we start thinking about, this idea of getting back into this as a top line again, working back in against this. And if it breaks, it breaks. If it goes back up again, we scratch out, don't we? There's no danger, no damage, guys. It's the way it always works. We always just get in and get out, shake it all about, try and find a bit of business, and then smack it for a few ticks. And then if it breaks hard, we're in it. If it doesn't break hard, nobody cares. Nobody's bothered. 72.49s, let's see if it opens the door, guys. 72.49s are defending it just now. 72.50s traded, 72.50s traded. So they keep coming down to this 49 and they keep on getting a buyer coming back in and just trying to push it back up again. But they're under pressure now to get rid of this trade here at 72.50s. So let's see if they unwind their positions, because if they unwind their positions, it'll open the door to 72.10, 72 evens. I like it. I like it. I like it a lot. Okay, bonds, top line, guys, top line, unbelievable. We've went from 162.23s to a low price of 162.12s. Top line on treasury bonds, working a treat, and that's the inflation hedge. We're selling bonds and we're selling oil into the same trade. We should never be able to do that, should we? But there we are. Inflation is away down here. So that's obviously the trade on oil that we're talking about. So what the hell is the bond away up here for? Doesn't make any sense. But we know why it's up there, because we've got a QE experience. We're getting the cash stimulus getting added in by China, which creates an upside on treasuries. That upside in treasuries, however, is inflationary. And as the price makes higher highs, we can sell bonds. If the price makes higher highs, we can sell bonds, because the inflation is all wrong in the background. The inflation is all wrong in the background. So we can sell into those higher high prices and take advantage of ultimately the sell-off. And Miguel pointed out that the 30-year inflation break-evens were a lot better than the 5s. Yep, but even the 30-year started to come out. See it, Miguel? The 30-year even came out on this retest here. That would have been a brilliant opportunity for you to start working into that 23 print. And obviously the sell away from that has been absolutely spectacularly beautiful. Just about working again, isn't it? It's about doing a lot of work. That's what trading is, guys. It's about working. Whatever side you want to be on, whatever side you think you should be on, whatever side you're trying to be on, you're not going to get it right every time the first time you go into the markets. You've got to work orders. You've got to have strategies. There isn't a right strategy or a wrong strategy. There's only your strategy, and if it's profitable, who cares what anybody else thinks? So the way you deal is the way you deal. The way you want to interpret how the time frame of reference that you use is unique to you. Mike might be bullish. I might be bearish. Mike's strategy might be to buy for the uptick press, for the liquidity, to try and press the liquidity. I might be a commercial sitting at a top edge, selling into that, buying. Mike might make money, and I might make money. Mike want to buy on downticks. I might take profits on downticks. I could help Mike get the price higher. Mike could help me get my sell at higher prices. It's a win-win situation. So there isn't a right and a wrong, guys. So if I'm selling bonds at the top edge and you bought for the squeeze, we both made money. Understand? There isn't the right and wrong, guys. There isn't a right and wrong about this. There's only a winning strategy. And if you can identify a winning strategy that works for you, who the hell cares? So I have a lot of short treasuries that are making a lot of money just now, guys. We're making a substantial amount of this, a substantial amount of money in this short run here on bonds. Very substantial amount of money in this short bond at the moment.